Hey guys. It's about to be as informal as it gets, okay? So I'm just gonna go through kind of the loan process as we've gone through it before. You kind of understand that you guys you're in the process of it. Adam's about to hold your fingers crossed, find a house. You're about to be in the process.
I'm in like slow motion.
Yeah, well, yeah, yours is literally slow motion. Slow motion. But for real though, it is, because that's fine. I mean,
Yeah.
they already approved,
Right.
so.
We're just hanging in there till the closing date.
Let me pull up a couple things. So I figure all we do is literally walk through from the time you send a buyer till the time after they close and make their first payment.
Mhm.
And then kind of some sticking points to kind of look out for on the front end for you guys, and then just kind of the any really questions you have. There's not much. So voila. Okay, cool. All right, let me pull up this. Can you guys see my screen?
Oh, wow. Look at your nice and put together PowerPoint.
That's right, babe.
Branding is on point today.
That's right. That's exactly right. Let me see. File. All right. Wait, how do you have it full screen? View. Full screen. Anyone know how to make this a full screen?
Sounds like a Windows problem.
Yeah.
Yeah, you're telling me. I hate that.
Whatever, last time I used one.
This page? or
Wait,
actual
is this a
size?
PowerPoint or is
No, it's
this?
just a PDF.
Oh,
So,
then
How's that looking? We'll just go like this.
Yeah.
Who cares? It's fine. Vicky, can you see that? Can you see my screen? I don't know if you can see my screen on the Zoom.
are you sharing the screen?
There you go. Okay. Cool. So I figured we just walk through from A to Z
Mhm.
from the time they're pre-approved, before they're pre-approved, and you guys find your client
Yeah.
until they are closed, funded, everything. You guys get your commissions checks, they make their first payment, we're rolling, okay? So when you guys find a lead, kind of like you've both been through with me lately, it's,
Mhm.
hey, let's get them connected, let's get connected, make that introductory text or call. Afterwards, let's see how their income looks, how they qualify. And see where they get approved, kind of get that budget piece started, see where they are, which is what we're going through with Adam, right? And his is kind of the very first sticking point I'll probably talk about of tricky income, because his buyer works 2 jobs as a chef and a server, so it's tip income. So it's just tricky, and it takes a little bit longer to get that pre-approval because their income is different.
Yeah.
So I'm gonna hop over to the PowerPoint real quick. Just so you guys, for the pre-approval, these are some of the docs that we asked the borrower from. You can take it too, brother. All right. These are just some of the docs that we asked for. As a lender, we have to verify income, assets, and employment before they can get pre-approved, because the way you're pre-approved is based off your debt to income ratio, which is all of your debts, all of your monthly debts. She's no crutches today?
No crutches today. That's why I'm a little late. It's gonna be a little bit longer
I
to
was
get around.
exactly mad at me. I was a little late too.
Sorry.
That's Bree, by the way.
Hi.
Hi.
Nice to see you again.
Nice to see you guys too.
So yeah, we have to verify income, assets, and employment when you apply.
So
that
if it's
yeah,
W-2s for the previous 2 years, what does it look like for 1099s?
that's what I was gonna get to. The very next thing is the sticking points. So we'll start there. I'll get there
Okay.
really quickly, okay? Because I want to show you guys how we calculate income.
Mhm.
So you have those borrowers, you can see what we're looking for to calculate that income.
Okay.
Okay, so when you have a normal salaried position, it makes our life a whole lot easier because you can just say, hey, I'm gonna make $80,000 this year.
Right.
Right? And
As
so
long as I don't lose my job,
exactly,
I'm making this much this year.
exactly. And so your paychecks are the same every 2 weeks or bi-weekly or monthly, whatever it is. So we ask for your last 2 years of W-2s, so 2019, 2020.
Yeah.
Your last 30 days of pay stubs. If, for instance, your pay stubs may vary hours wise, because you're paid hourly, we may ask for 60 days just to see that that's balanced out.
Yeah.
Or get what's called a verification of employment, which is what we had to do with Adam, where we send a form to their HR manager or their someone on staffing and say, hey, how many hours are they guaranteed to work? Can you fill out this form for us? Let us know what they've made year to date
Yeah.
and what they are paid hourly and how many guaranteed hours, so that we can calculate the income. Reason income is so important is the way you qualify, like I said, it's based off your credit score and your debt to income ratio. And so your credit score is just a credit score. You guys can kind of understand that. But debt to income ratio, like I said, is your monthly debts. So your student loans, car payments, credit cards, everything, plus your new mortgage divided by your income before taxes. And so if you have $1,000 in debt of student loans, credit cards, you add a $1,500 mortgage to that, that's $2,500. If you make $60,000 a year, or $5,000 a month, your debt to income ratio is 50%. Yes.
Question. $1,000 student debt, that would be great. Most people don't have $1,000 student debt.
I think you're talking about like
monthly
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 payment
payments
of
of it?
$1,000 student debt.
Oh,
So
okay.
everything's calculated monthly payment wise. So for like, for instance, on a credit card, you use a minimum monthly payment, so it could be $35 a month. For student loans, right now, student loans are in deferment, right? Meaning you don't have to pay them until February. Meaning, let's say you have, for instance, my wife is a PA, she has about $50,000 in student loans right now, okay? That means that we would take 1% of that $50,000, and that's what we would use for qualifying for that month. So that would be monthly payment of $500.
Is medical debt also taken into account?
If it's a collection, no. If it's medical collection, you do not have to use that for qualifying. If you have a collection that's not medical, you have to kind of bring that into the
Right.
picture. But if it's medical debt, you can exclude it.
Okay.
So, great question, by the way. So that's how it is, that's kind of how you use debt to income. So that's why you have to verify the income piece. So that's with the paychecks, the pay stubs and W-2s. Then the employment history for the past 2 years, you have to go back for 2 years to make sure you kept that job. If you have a gap in employment, most of the time you can work around it depending on the loan. You just have to get a letter of explanation why you weren't working. For instance, if you were let go for COVID for 3 months last year, then you could turn around and say, hey, I got a job, but I had COVID, could not finish. So that's all you have to do. Super easy. But if you have long gaps of employment, you may not qualify until you have a longer history. If you're a student, for instance, let's say you just got out of college, you got your first job. You can use your transcripts and you say consider yourself as a student for that 2-year history of employment and still qualify for a loan. You can also use, for instance, let's say someone was a student, just came out of college, just got an offer, right? But they got an offer and they're ready to buy a home. Or anyone, they get an offer letter. You can use an offer letter as long as your start date is within 60 days of closing. So let's say you close November 1st, as long as you start before January 1, you can use that income for qualifying income because it's based off future income. Does that make sense?
Yeah.
As long as it's a salary position. Now, if it's commission, that or like commission, 1099, something else, you wouldn't be able to because you don't have a guaranteed salary.
Yeah.
Does that make sense? So, but if you have anyone that comes up that say, hey, starting a new job next month, but I already have the signed contract or offer letter, great, let's see, you can apply and become eligible with that. Cool. After that, we have to get bank statements to verify you have enough money for down payment. And so you get last 2 months bank statements, which is a lot of people always like, oh, I don't want people seeing my bank statements. No, we don't look through it. All we see is if you have any large deposits that, hey, Helen, what's up? So, yeah.
I love your dress.
She's styling, bro.
Yeah.
She always comes in looking good. Mhm.
You want to tell them what we were talking about yesterday?
But yeah, so 2 months bank statements just to show that you have enough for down payment. If you have a lower credit score, we may ask for reserves. You can use a 401k for reserves. You can use any type of savings account for reserves when you have that bank statement. So, but they need the last 2 months.
Are other investment accounts outside of a 401k?
Yeah, whatever cash or assets that you have, the more you have, the stronger your file is.
Yeah.
Now, if you have for instance, your borrower has a 750 credit score, perfect credit, they have $50,000 in the bank, they're only putting down 30,000. Probably don't need to show anything else other than that one bank statement.
Right.
Because they're gonna qualify. Now, if you have like a first-time home buyer, 650 credit, their bank account barely covers the exact amount they need for closing. You may want to show your 401k, any other investments, anything that can show because it strengthens that file.
Yeah.
Does that make sense? Yeah,
Do you work commercials as well or just
I
residential?
just do residential.
Okay.
I always refer as a commercial officer. Need a guy, I got a couple that I refer out.
I do need,
Okay.
Same, I have some questions on commercial as well.
Oh, we got like daytime over there. If you're commercial, I wish I could. So yeah, that's exactly what it says right here, most recent 401k statements. As far as the tax returns, you only need it if you're 1099. We're about to get into that. Residence history, we have to verify where you live for 2 years prior, make sure that you are making rent payments or making your mortgage payments on both those. So you just have to take a 2-year history of that.
If it's out of the country,
You still just have to put it residence, like you have to have a 2 years history just where you live. So
oh,
for
just like have an address there. or
exactly,
something.
you
Okay,
just have to enter an address. As long as you have an address, even if it's your parents, you can just put your parents in there and just say, I didn't have any expense, and you're good.
because all the, where you've lived, it shows up on your credit report anyway, right?
Correct. Yep, so they just have to match it up.
Exactly.
So yep. It's one of, if you pay off a mortgage, don't really worry about that. That's a very unique one. Photo ID is easy, and then just credit, so. And this is all just when so in our system, when you guys find a buyer, right? They come to me, we ask them not to apply instantly. This is all in the application. Application has a spot. Ree's husband, actually, or boyfriend, sorry, I said husband, just actually filled one out, but at the end of it, it gives you a spot to upload everything. And so it's super easy to do. It literally is like, hey, upload this, upload this, upload this. We actually just switched systems to this, which is great for bank systems where you literally just, it's a secure portal where you enter your bank account information and it gives you all of the transaction histories for the last whatever it is. So then your borrower doesn't have to worry about tracking everything down. Because that's probably the biggest pain point for a lot of people is trying to get the bank statements, trying to get copies of the earnest deposit, trying to get transaction histories to match. That's the biggest pain point for a mortgage that everyone says. So we try to eliminate that. All they have to do is enter their bank information and it takes care of that for all of them. Super easy, super cool too. So, VA loan, we do have to get a DD 214 or a COE, depending what their rank is or where they are in the Army, if they're reserves, if they're Army, all that means is to verify that they were in the reserves or in the Army.
Right.
That's all it is. Super easy forms. And yeah, so this is everything that we use to ask for document wise. A lot of borrowers, they freak out about the paperwork. It's really not that much, as long as you do it at the very beginning. Just so we have to verify income, assets, employment.
Yeah.
You're done.
Did you already go over the FHA loan? So
Yeah, so I mean, FHA is the exact same as this.
what are how do they qualify for? I'm sorry that I
No,
missed
you're
that
good.
section. but how
No,
do they-
we have it.
Oh, you
It's the
have it,
exact
okay.
same. No, so FHA is the exact same qualifying. As far as qualifying goes, is the only difference in FHA,
From conventional.
is that it really comes down to, they are really more strict on income. Make sure that your reserves, you have that down payment, that reserves. in
But it's
there.
only 3% that is
Yeah,
required, right?
3.5% for FHA.
3.5%.
Yeah, for FHA. So
And
it's easier to get an FHA. They just are more strict on what they look at for it. It's really the exact same document list for conventional FHA.
and I know this is me personally, the
Yeah.
question in regards to my clients that
Yep.
you could pre-qualify, would they be candidates for FHA?
Yes, I would highly encourage you. No, I will tell everyone, I would stay away from FHA.
Oh, okay.
Because I'll pull up a few worksheets, actually, let's see if I have one.
you need private mortgage insurance for the life of the loan.
Bam.
Mhm,
Yeah, so the
mhm.
big piece.
That was
is-
my next question, yeah.
So when I see anyone, my first thing is to see if they go FHA is if their credit score is under 680. Their credit score is under 680, rates take a pretty big hit for conventional wise. Anything above 680, rates are pretty dang good conventional.
Mhm.
Now, if it's below 680, it takes a pretty big hit.
Okay.
Where it may make more sense to do FHA.
Okay,
And if it's, so then what I do with all those borrowers is show them both FHA and conventional and see which one they kind of want to choose. If it's between 640 and 680.
Mhm.
Now, if the credit score is below 640, just FHA. 600, 640, it's just FHA.
okay, okay.
But the big piece of FHA, the private
Repeat.
mortgage insurance for the entire life of the loan. And the biggest piece is they have what's called a funding fee or a upfront mortgage insurance
Mhm.
of 1.75% of the loan. So let's say you have a $200,000 purchase, okay? 1.75% of that is essentially $5,500.
And that has to be upfront
And that's just financing to the loan. So you're adding $5,000 into
automatically to it.
automatically, plus that mortgage insurance that never falls off.
Mhm.
So the only time to do, I always say FHA is if someone strictly doesn't qualify for conventional, otherwise I try to put them in
Get
conventional.
it.
And with first time home buyers, you can put as little as 3% down for a conventional loan.
Okay, okay,
Even with income, there's, for the best rate possible, there's an income limit of $68,000 on it. But it's not a very big difference. The difference between 3 and maybe 3.125%, an eighth of a percent takes the other, for the other program, that's 3% down conventional. So I would try to put people conventional. It looks stronger on offer as well. It makes your guys' job a lot easier with appraisals. Because
okay.
appraisals for FHA.
Are more,
Yeah, they're a lot more strict, because for VA and FHA is owned by the government.
right, so they have to be on,
Safe and sound is kind of what they say.
get it.
So, yeah.
You
So
answer
we-
all my questions. Thank you.
But it works for Burley and them. We'll probably go conventional. You can go.
See, I'm sorry, just need to catch this guy for a few minutes.
Okay. Yeah, caution points to look out for is self-employed borrowers. You guys have someone that comes up that's self-employed. If they receive commission or tip income, welcome to your first rodeo. When you're talking about if they have any employment gaps, mentions of bad credit, if they're veterans, or if they are wanting to be an investment property or a just normal primary purchase. So investment properties, you have to put 20% down, 25% down to get the best rate. Conventional or your primary residence, you can put as little as 3 or 5% down. So it's a pretty big difference when you get into.
When you said investment, you said the best rate you get with putting 25% down?
Yep.
Okay.
Yep, so you qualify 20, but it's literally like a 0.5% better if you put that 25% down.
Mhm.
For instance, 20% is right around 4% right now,
Mhm.
25% you got 3.65.
Okay,
So pretty big difference.
yeah.
And it's worth it if you have that people that can put that little bit more down.
Mhm.
So yeah, those are some cautions just really to look out for at the beginning. This is still in that, when you just have an initial buyer consult, just kind of talking to them about it. What we'll do real quickly is I will show you guys how we calculate 1099 income, because the way you qualify for 1099, this is huge for all you guys, because you're.
Because we are all
1099.
1099s.
Yeah, right, is you have to have 2 years history to even start to qualify.
Okay.
You have to report it for 2 years, so you have to have 2 years of actual tax returns.
Mhm.
And then it kind of stinks. Well, it works, it's great for taxes, great for everything else. Stinks as a bank or a lender. Let's say you make $100,000 in commission this year, okay? But you write off $70,000 worth of expenses. We, as the bank, only can use $30,000 for qualifying, because that's what you pay taxes on. We can only use what the IRS reports as your income for qualifying for taxes.
Yeah.
And so a lot of people, that's a blessing of being 1099, you can write off a lot and save a lot on taxes. Where it stinks is trying to qualify for a mortgage or other debts. So I'll show you guys how we calculate it. It's actually pretty simple. All we have to do, don't mind how messy my computer is right now, is we have this formula that is, we're at here. Hello? If it loads. And most of the time when people are looking to invest, or they're 1099, they're like us, I talk to them before they file their taxes, and we kind of go through, hey, this is what you can write off, this is what you can have, this is what you need to report in order to show that you made money.
Mhm.
So, every mortgage person is the same. This is how you have to calculate self-employed income. Okay, so you take you get their full tax returns. So everyone's file is different. If you have an LLC, you may be a S corp. If you can be S corp, LLC, just a corporation, a partnership. There's so many different ways to file.
Mhm.
Most of the time for you guys, it's Schedule C, which just means that your sole prop owner company is part of you.
Mhm.
And so all we do is we go in here and show, for instance, let's say it's 2019, 2020 taxes, okay? Let's say for 2019. That's in 2019, just don't look at that. So all we do, we look at your net profit, which is literally, it says line 31, that's your line on your tax return that it is, okay? Excuse me, that is after all your expenses are taken out. So it's probably the lowest number on your Schedule C of what you guys report. So when you guys report taxes, you'll be able to see it. I have a tax return in my office actually, but all that is, let's say you make 100,000 like I said, but you only report 30,000. All we can put in here is
Just
$30,000.
30,000.
Yeah, but this is where you can start to add things back. If you have depletion or depreciation, a lot of times people don't have this non-recurring income. That's if you have a one-time big hit of income or loss for some reason to your business, you can add that back in. Depletion and depreciation, most of the time in your guys' business, that doesn't happen as well, because you don't have an asset attached to it, you don't have a building, you don't have anything. If it's a big company with a lot of buildings, they usually depreciate a lot, and that's how they write off a lot. And so you can add that back to help you qualify. Mills, you actually have to subtract out of that 30,000. So if, let's say you paid off $1,000 of mills, that number now becomes 29,000. Business use of home, a lot of you guys will do that. And so you'll do business use of home. And miles, that's a huge one. There's rates for different miles. Let's say you have 10,000 miles that you drove and wrote off on your taxes. That actually adds about $2,600 back. Okay. So the way you qualify 1099 is you take the 2-year average. Let's say your next year, 2020, you report 70,000. Okay. You have, don't write off anything. Your miles, you have 7,000 miles. It's your second year in, you now make 71,000. Okay. You come down here, super easy. You get the average of the 2 years. This 4,309 is what you make average monthly over those 24 months for your qualifying. That is the number that we would have to use for qualifying. Even if you made $71,000 in 2020, 2019 you only made 31, we have to take the average of the two, and that's what you use for qualifying. Does that make sense? So a lot of people get confused, saying, oh my gosh, well, I made $110,000. Yes, you did, but you wrote off, your net profit was only 30. That's where the big mistake, people in 1099 get confused. So all you need to know is you guys don't have to worry about that. Just know it could be, they may not be approved for as much as they want, or they think they should be when they're 1099. Same with commission and tip income. You have to use the 2-year history of the commission and tip income and average it out, because it's not guaranteed. And so we go back those 2 years and average out what they made for your day. So like what we did for Adam was we got his 2019 and 2020 very last paychecks or pay stubs for those years, because it tells you what he made for tip income over those years. Added those together and divided by the 24 months, and that is where you use your qualifying for that. Does that make sense at all? It's kind of confusing, but just so you know, the pain points of when you're qualifying for, this is all in the pre-approval stage. When you're qualifying for it, that's something that you want to get, because a lot of people will be confused. Like, I make this much money, why don't I qualify? You just, if you hear 1099 or self-employed, just know in your mind, hey, just a heads up, it's going to be a little, you're going to need to provide a few more documents. It may not qualify for as much as you think, depending on your write-offs.
Yeah.
So, does that make sense? Cool. All right, let's go back to this page real quick. Okay, so all that's just to get them pre-approved. Welcome to mortgage lending. So get them pre-approved, and after that is a fun time. I let you know, kind of like we did, well, your sister's a little bit different, but like for Adam, I said, hey, this is his budget, this is where he's max approved for, this is where he wants to stay around monthly. And this is, here you go, pretty much, right? That's after our initial consultation, the buyer now feels good on their end with the mortgage, where they feel monthly. A lot of times when you get them to a mortgage lender, it helps because they're like, I can actually afford this. You know, where before they're like, oh, I don't know anything, I don't know where my numbers are, I probably can't buy a house, or it's really stressful. Once you get the numbers in front of them and they realize they don't need that much documentation, it really sparks them, I would say, to go get the next step of looking for a home now that they know. So this is the home search. You guys go do the home search. Takes a while. Once you find the actual home that you want, let me know, because in your mortgage, you have your principal and interest, property taxes, homeowners insurance, and PMI. I'll get everything dialed in exactly besides homeowners insurance, because I can look up taxes and everything. So they'll know what their payment is when they find that contract, so they can feel comfortable with that house. And then once you guys do that, it's your guys' turn. Make the contract offer. I'll send you a pre-approval. You guys write the contract. A lot of times when you guys write the contract, I'll call the listing agent for you, let them know that they're pre-approved. They turned in every document that we just talked about. We verified their income. They're looking good. And so it helps with the listing agent knowing, okay, these people are probably going to be pretty good. Fairway's kind of known now in Kansas City. It's more of a known brand.
And that especially right now, because there are a lot of contracts falling out,
Yes,
that goes a very long way. When
100%.
Tanner reaches out to listing agents and is like, hey, we've got a ready, very capable buyer that's gonna make it to the closing table. Listing agents really want to hear that.
it's really, I mean, you would too as a listing agent.
Yeah.
You know, not a lot of people do it. I don't understand why, but it's like just that extra step of knowing, okay, a little comfort for your sellers
Mhm.
that, hey, these are gonna be good. So, it works. Let's say that then all of a sudden you guys do get the contracts. We go, we crazy, we're excited, we're happy. After that, it's the fun part where we're starting the process of going into home, right? So on your guys' end, we're already on kind of step 4 now of, they already applied for the loan, we're on purchase price negotiation. You guys kind of did all that on your end, right?
Mhm.
And so we are, get a house under contract. And let's say you got it for $300,000, put 1% down, so that $3,000 that you put down in earnest, right? We have to get a copy of that check from it, so we can take that off what they're paying for cash to close. So we ask the title company for that, or the borrower, they usually have a copy of it, get a copy of that earnest check from them. And then it's kind of, okay, it's go time on our end and on your guys' end, all you worry about is inspections, right? You guys do inspections, let us do the back end stuff, and then we'll come together on the appraisal piece, right? So you guys, right after you get the
And
contract,
so like as the lender, you guys schedule and do the appraisal and
you guys
everything.
don't have to worry about
Yeah.
it. I'll talk to you, depending on the buyer, sometimes we schedule appraisals quickly, knowing that if something happens in inspection period and they back out, we'll just cover the costs on it, so your buyers don't have to worry about it.
Yeah.
Or if it's one that you're like, hey, we may actually back out on this inspection, we'll wait to hear from you in inspection time to order that appraisal. Just kind of depends on the situation, the time, like on yours, we kind of waited until the inspections were done to order it because we had 60 days.
Right.
If it's a 20-day closing, we're gonna order that baby and just hope that it works.
Yeah.
So you guys worry about inspections. On our end, what we do is we get all the application that I had before really dialed in, teed up, perfect matching the contract, get all the dates in. And then we reach out with an updated needs list to the buyer.
Mhm.
So we ask them for updated, they need to do updated bank statements, updated pay stubs, updated anything, we just update the needs list. So then we have everything in a package to send to underwriting. And that time, if they send us everything, we kind of answer all their questions for them, get everything answered, and order the appraisal at that point, okay? So we get everything, asking for a needs list. This is number 6, is where I am, disclosures, okay? So what disclosures are is all the information on the loan is your loan estimate, your official loan estimate, all your government information that you may have to sign for the government, your intent to proceed form, which means that, hey, we intend to proceed for this. Everything, this is why I always tell the buyers, it's something just good to know, is everything that they're signing initially is just signing that they want to continue with the process. It's not signing anything officially.
Mhm.
Meaning until you sign that closing table, we can change everything. However, one of the pain points as a lender is in this disclosure step, is they don't sign those right away. They kind of let them sit. Your buyers just sit on them because we can't do anything on our end, can't order the appraisal, we can't move forward, we can't send the loan to underwriting, we can't do anything until they sign these initial disclosures, because it has that intent to proceed in there. And so until they sign that intent to proceed, we're kind of stuck. And so after we get the contract and they send us earnest, we send out disclosures and a needs list for them where they know what they need to provide and they know to sign those disclosures, okay? Once we get those disclosures back, that's when it takes the same time as the appraisal or the inspections, and that's when we can order the appraisal, okay? Appraisal is, for you guys, everyone thinks it's pretty, I mean, that's one of the biggest pieces that you kind of have to, last stepping stone as an agent to get through everything, right? And so you guys don't ever have to worry about ordering the appraisal. You don't have to worry about contacting them. Our appraiser will reach out to the sellers to schedule what time it is. I'll usually let you know if we need to, like you guys want to be there, I'll let you know when it's due, when it's coming. Otherwise, I'll just tell you what the due date is.
Okay.
And let you know what the due date is. The appraisal is for a conventional loan. It's pretty simple. They just go in there and give you a value essentially. For a FHA or VA loan, it could be a little different because it has to be deemed safe and eligible, which you guys know of. But when it's deemed safe and eligible, that means there could be no lead-based paint. There should be handrails, there has to be stairs, have to make sure they're good. Just different miscellaneous items, okay? So that's the appraisal piece. After we order the appraisal, and your guys' end, you're kind of done at that point, right? For a little bit, you're kind of just waiting. You get them under contract, you get the earnest in, you get the inspections done, appraisals now in, and you guys are kind of just waiting till close. We then send it to underwriting, where when we send it to underwriting, all that is that means the underwriter goes in and reviews everything that we did, make sure it's good, may give us another needs list. And then once that needs list comes in, we send that to the buyer just to get updated docs and everything else. This is when, for instance, Zach, did you just get the conditional approval email? Or a while ago, you probably did, I think you did.
Yeah.
Yeah, so we have an automated system. You guys get anytime there's a mile marker hit, so appraisals ordered, loans applied, contracts in, earnest deposit, conditional approval, everything, you guys get an update on it. What conditional approval is, means the underwriter reviewed it, everything's good, we just need a few more documents before clear to close. And so that's where we are now with Zach's buyers that are under contract. We are really actually done, we're just waiting for title because it's such a far closing that they haven't got title done. So we're just kind of in a sitting period with them. So that's underwriting. After that, we get their loan approval in, and you guys we're all just kind of waiting at this point for the last docs to get in. And we send it back to underwriting for what's called the final loan approval or clear to close. And so when you get that clear to close, that means that, hey, your buyers, everything's good, we're done, they're guaranteed the money. We're looking good. You guys get that, usually it's done pretty quickly, we're pretty good about that. Sometimes it's usually done within, we try to get done before 48 to 72 hours before you have to close, so then there's no worries, last day of closing. It's quick closing, you may be a little closer, other than that, it's not. The biggest piece is we send out what's called the initial closing disclosure after that, which is called the ICD, or the closing disclosure has to be sent before 3 days of closing. Legally, it has to be signed, sent and signed before 72 hours of closing. And so we always track it, we know where we are. But for instance, if you're not working with one of us, always check in with your lender and just say, hey, before 72 hours, have you guys sent the ICD? Just, it's simple, just actually make sure. Most time, 99% of the time say yeah. Otherwise, if not, you legally have to push it, closing back with the ICD to be sent before 72 hours prior to closing. Okay, so just something to kind of remember. After that, we send them the final CD, which is finally we get all the docs balanced with title. So the way it works when you get the closing disclosure, we have our side, title has their side, different fees. Everything that was in the borrower so far is an estimate, title is sent estimates as well, their settlement statement or their ALTA, and then we get the ALTA from title and we match it to our CD, and they call it balancing, they balance it out, make sure it's exactly the same, and then that's how we get the final numbers. So we get the final numbers. You guys with the ALTA from title, they'll let you know exactly what the final numbers is. I'll get the final CD on our end, I'll send it to the buyer, let them know, hey, you need to bring this much amount to closing. You can rather wire it or you can get a cashier's check made out to the title company for closing. And then once you have those, they are time to go. So you get your cashier's check, make it out to the title company, or wire, depending what buyers want. It's usually easier for a cashier's check. You just bring it to title, mail it out to them, and then you go to the closing table. Sign at closing, that's when everything comes officially sign everything. Amazing, got it done. Usually same day we fund, unless it's a 4 o'clock closing. Other than that, we'll fund that same day, meaning the loan's funded, the seller's signed, everything's done. And then the good part is, at that point, you did it. You guys get paid about a few days later after that. And for them, the buyers now can move into the house, usually take possession, and then don't have to make the mortgage payment for 2 months. And so let's say by November, or they close in November, you don't make your payment November or December, your first payment's January.
What about like for Kelsey and Sandy, and they're closing on the 28th of October,
So that counts as October,
so their first payment's gonna be January?
December.
December.
Because it doesn't, that's what gets confusing, is it doesn't matter what day of the month, that goes month by month.
Okay,
And so if your October if you close October 31st, okay?
Mhm.
You still October, you get a miss October and November payment, your first payment's December.
Okay,
If you close November 1st, you get a miss November, December, your first payment's January.
I see.
Gotcha.
Does that
Okay,
make sense? So it goes by month, not by day,
Is
Okay.
that like standard?
everywhere.
Okay.
Yep. And in the meantime, in that, a lot of the reason is, so at closing, they collect interest for the first month. So let's say you close on the 28th, Jack, okay?
Mhm.
They're gonna collect interest on the loan from the 28th through the 31st. So they collect
Mhm.
3 days interest for that first month. Second month's
Right.
completely free. You don't have to pay anything, but that first month you pay interest for that month. So if you close on the first, though actually your closing costs will be a little bit higher because you have to collect 30 days of interest at closing from the first through the 31st at closing. Does that make sense?
Mhm.
So it doesn't matter that much. It just depends cash flow wise, if you feel more comfortable. Hey, I'm already paying this much closing. I'd rather close November 1st, so I can miss 2 months technically in your head is really where the difference is. Other than that, we sign them up, get them set up on monthly payments, drip campaigns, all of that fun jazz, so they know exactly what their home values are. They get signed up for payments and they are looking good. And they're done. And you guys go find another one. So that is the loan process from A to Z. What questions we got? It's not hard, to be honest. It's just if you get documents done in the beginning where we can verify everything, so you know exactly what you're pre-approved for.
Mhm.
You have no stress for your buyers that are here for this amount. They don't have any stress of, oh my gosh, the lender just asked me for 18 pages of bank statements. I don't know how I can get them in time. That's why it's important to slow down in the beginning. Make sure that you pre-approved in the beginning, make sure everything is done the exact right way. So then you don't, it's literally like Zach and I, for instance, we haven't done hardly anything for 30 days.
Mhm.
Because seriously, I
No.
mean, they did everything so good. His sister got everything turned in at the very beginning, it was done, got it all done completely. And so we literally, it's a 60-day close, but we're done.
We're
in
just
10
twiddling
days.
our thumbs until
Yeah.
closing.
Right, exactly. So yeah, I mean, once you do it in the beginning, just make sure, put that in your buyer's head, hey, if you just get the documents early, you're done. And they really are done at that point. So yeah,
And the money for closing, like
Yeah.
for the cashier's check, where are we gonna get like the exact number for
yeah.
what they need
Yeah.
that cashier's check?
So I will send them, I send them a final CD, you will also get an Alta from title, so the Alta will come to you guys.
Mhm.
I will get the final CD on our end, that they match the numbers, they say the exact same amount. I send that and the amount that they'll need in the title company, everything, what they need on the cashier's check, as soon as I get it. It's usually within probably 48 hours before closing,
Mhm.
if it's a quick closing, maybe 24.
Mhm.
But they'll know and I've never had an issue with that. If anything, a lot of title companies allow you, let's say it is like a very quick closing up to the last second, something happens and we can't close until like that, we get it that exact day, right?
Right,
A lot of title companies still let you sign all the paperwork, run, get the check, bring it back, and you have the exact number.
Mhm.
But that's a very, very, very rare occasion, usually 48 hours before. I send them an email with the exact number, the cashier's check, the final numbers, and I go through it.
okay.
So, yes, sir. What else? Any other questions? All this will make more sense once you go through it a little bit. I mean, that's the nature of the game. It's just gonna get an information.
Yeah,
in
you
front of
kind of
you.
learn as you
And
go.
it's the only way you learn real estate, right? Y'all can take the test, y'all can read everything, y'all can listen to me, but until you actually do it, it's just like, whatever. I'm telling you, a lot of people, that's your first deal, you want to stress about it, be on top of everything. All it is, hey, just know that we're doing all this on our end. Just make sure inspections are good, your buyer's getting taken care of on the front end, know the back end, we're moving with it. And I'll update you, you get automatic updates every time it hits a milestone. For instance, when we receive the application, when we send it to processing, we send it to underwriting, when it's conditionally approved, when it's final approved, when we're clear to close. Anytime a step happens, you guys get an update as well. And the listing agent does, so they don't have to, you don't have to update them. And the buyers do, everyone does. So it's super easy. System is mainly just get those documents in the beginning so we can verify income, because that's the only time you can ever get backed out after you're already under contract. If you lie on your income, or you didn't give us those documents in the beginning. So that's it. Any questions before I sign off? Nothing? Okay, very well done. Thanks for coming, guys.
Yeah.
It's always
That
good
was
to be
good.
supporters. How do I stop, share, stop recording?